This morning, we've spoken with a number of Fed officials who basically say there are risks out there, but we think that the economy is going to remain strong through 2020. So as the man who was tasked with figuring out what might go wrong, even if you don't believe it, what are we looking for?
Well, first of all, the world economy is more fragile than the U.S. economy. I think China in particular is facing a slowing growth curve. Europe, still dealing with all sorts of problems. And emerging markets, that's an area where debt's been going like this and growth has been going like this. So it's been a long time since we've sort of had a systemic crisis. We have Argentina Greece, but they're small blips compared to what we saw 10 years ago. So I think those risks are coming. Coming from the United States, I don't know. I'm sort of probably compared to this group more positive about U.S. growth, whether you like Trump or not. I've always been saying U.S. growth would be good. But of course it's vulnerable. There's tremendous uncertainties out there. Of course we can have a recession. It's extremely hard to say. To be confident through 2020, I think that's a strong statement.
Yeah, well, Larry Summers was on your panel, and he suggested that this expansion is perhaps more fragile than others because confidence isn't really strong at this point.
Yeah, Larry's had this tack that every expansion, the 90s, the 2000s, every expansion was more fragile than the last, and this one's a continuation of that. I'm not so sure of that. I would say our odds of having a recession are normal. I think the fragilities mostly probably lie elsewhere in the world. But there is greater political uncertainty, and I mean policy uncertainty of what direction we're going to go. There's not only a big difference between the Democrats and the Republicans, but there's big difference between the Democrats and the Democrats, and it's a little hard to know where things are going, projecting policy. I don't really see that in the markets at the moment. It's sort of surprising, but maybe as 2020 approaches, it will dawn on people that, for example, if Biden's the candidate and he wins, he may still be very beholden to the left to try to enact policy. And so we could see quite a radical shift, even with a more moderate candidate. And of course, with Donald Trump, it would be a continuation, but there's a lot of volatility there I don't need to explain.
Well, the Fed just came out with a paper that suggested economists were right, that trade wars, tariffs have increased costs and cost jobs. If we kept going with that, does that then create the risk of recession that we've been looking at?
Well, there's no question, if we just kept going with the trade war, there's a short-term cost to it. I think the China-U.S. relationship is a complex one that we need to deal with. If we really permanently raise tariffs, raise the barriers in the global economy, I think that's going to lead to significantly lower long-term growth. It's hard to calibrate that. The Fed paper, also the IMF, gave a pretty big number for what the trade war was doing, but a lot of that was coming from the uncertainty about policy, not the tariffs themselves. So how it will play out in the future if we settle on a more balkanized global economy, I think is less clear, but I think it would be very significant also for markets.
There was a general agreement that the Fed has limited tools for the next recession at your panel, and there was also a lot of agreement about what should be done on the fiscal side, but isn't being done. How worried are you that we're going to come into the next recession without the tools and or the political will to do something?
Well, I'm not worried about it. I think it's a certainty that we're going to go into the next recession lacking the tools. I think you and I have talked about negative interest rates, but that's off the table for the Fed, so their policy options are very limited. I don't think they have a lot of power. And on the fiscal side, we live in this very, very politicized world. So at these AEA meetings, they treat it as if that wasn't there. They have these papers about if we have this benevolent person running fiscal policy and they'll be there forever. But in the real world, fiscal policy spent on real things, on real people. Governments favor their own people. So I don't think fiscal policy is a long-term answer to substituting for the limits of the Federal Reserve's capacity at the moment.